This maximum deviation from quoted price is a very, very convenient function here. Okay, let's use this price right here. We're looking to sell pounds. Remember, the market's going down, so we want to sell as it goes down. So if we enter an order to sell at 95.96, if the market's moving too fast, our broker might fill us much lower than that. They may fill us down, let's say 95.90. So you can see there's a 6 pip difference. Well, if we don't want to pay, 95.90. If we don't want to pay 95.90, this is where we enter what they call the maximum deviation. What they're asking you is, how far are you willing to let us move from your price? Very, very nice function. This way, if we're trying to sell 96.03 and the market starts moving, if the market moves down, let's say it moves down very aggressively, and all of a sudden it's down at 95.90. If we don't set this, then our broker is simply going to fill us here. You can see we've already missed out on 13 pips. So instead of having to risk this, we could simply tell our broker, hey, if you can't get me my order within 1, 2, 3, 4, 5, 10, within, let's say, 2 pips, then I don't want to get in at all. So that would be your maximum deviation. So in that case, if we were selling at 1.9603, the lowest that we could take an order would be 96.01. If it went below there and they couldn't get us our pounds sold, then we simply wouldn't get filled at all. They'd come back and tell you, well, we couldn't get your order in time. The market was moving too fast. Okay? Now they have the order type here as well, what they call instant execution. Instant execution means it's going to happen right now. This is also called a market order. Now, a market order simply means I want to sell at whatever the market price is right now. And that's why they have this maximum deviation. Because if you think about it, the market right now, if we want to sell, is 96.05. Well, what happens if the market starts going down? Well, the market could easily change to 96.02, 95.99, 95.95. The market could go down, couldn't it? So remember, a market order doesn't mean that you are going to get filled right at this price. It means what you're basically telling your broker this. You give me pounds wherever you want. Now, that's not a bad thing. Because if you want to get in, it's good to just get in. But you have to remember that market orders are telling the broker, you give me pounds wherever you want to. That's why we use this function here, and this is why I'm highlighting this broker, because they allow you to tell them, well, you give it to me wherever you want, but if it's more than 2 pips away, forget it. I don't want them anymore. Very, very convenient. Also very effective. Now, you can also do what they call a pending order. Now, this is what's also called a limit order. A limit order simply means you're telling your broker, look, I want to buy, well, we're using sell. I want to sell pounds, but I only want to sell pounds if you can get it to me at a specific price. So I'm going to move. You see I'm touching on this arrow button right here? Now you look over here. This is why I like this broker, because it's very convenient to place orders and to process orders. So you can see here, if I want to buy pounds,